Hello and welcome to another update video about Tesla. Quick update because we have some movement in the chart. Bit of upside today. Market is now obviously closed, but also slight upside post-market. And we can see obviously this, I updated the chart already like a few days ago. Price did come into the support region, and has now left it already. So we have to pay very much attention to this now because it could very much indicate that this fourth wave is complete. Fifth wave has started. I cannot guarantee this yet, but we take a look at what is the level that needs to break to the upside in order to make that fifth wave more likely now that it's actually already running. And we also take a look at how low could price actually go and still be a wave four. All of that we try to answer in this video. First of all, we're exploring the idea that Tesla bottomed here locally in a wave 2 on the, I think it's the 4th of January, rallied then in an impulse in a wave 1, moved down in a WXY correction, already here turned around in our trend reversal area, nearly touched it here in March and then bottomed eventually in April. Since then, we have a 3-wave move to the upside. Okay. So a 3-wave move up, which means ideally we get one more high to form this larger third wave, and then a fourth and a fifth. At the moment, the idea is that a wave 3 topped on the 20th of June at around $276. That would only be the third wave of a third wave, and we can still go higher. Now zooming in, going to the 1-hour chart to get a bit of an idea what's going on here. First of all, we need to establish, okay, has this third wave actually been long enough? I mean, very clearly it has been, absolutely. So if we look at the Fibonacci extensions, it reached basically more than the 3.618 extension. I mean, that's on the linear chart, on the log chart, basically very similar value. This is very, very high. I mean, what I cannot rule out, I think I explained that in the last video, we can actually add another 1, 2 in here, and then this third would go higher, which is possible. But again, that would be even more bullish, so I don't want to raise expectations too much. We leave it like that. The idea is now that price can come back. We were waiting for a fourth wave pullback that happened now. Price basically touched this trend line. Well, nearly touched the trend line. It's not terribly well defined anyway, more or less. So don't take that one too seriously. What is more important are the Fibonacci retracement levels. And in a fourth wave, we typically want price to come back into the region between the 23.6 Fib level and the 50%, between 250 in this case and 221. Any break below $221 would not really be good for the chart because it would indicate that price is coming back too much for a reliable wave 4. And it would rather emphasize the idea that price topped only in 3 waves and could easily come down then, because we want a 5-wave top. We don't want a 3-wave top. 3-wave tops are bearish. That's why this is the area where price has a good chance to turn around now. But if it doesn't, then we need to be on the lookout for a much more bearish outcome, and all of this could shatter, and it was only a 3-wave top. But let's see. I mean, it's come down now into this region in a 3-wave move so far as it seems. I could count that now as complete. There is no strong evidence it has bottomed. It's a bit of a wait and see. Whenever they turn around in our trend reversal areas, it's a bit of a wait and see because, as you know, these areas could be used to enter a trade with the stop below the box. For example, that's just one way of using these setups. Never financial advice. You have to make your own decisions. This is purely an area where I assume price has a good chance to turn around. There's never a guarantee. That's why we use stop losses, and how you set them is obviously up to you. But this is an area where reward is typically high and risk is fairly low because you can measure the risk quite tight, and it's quite a tight way. Now, again, when it's then leaving the box to the upside, it's a first indication that price is bottomed, in this case in a wave 4. And at some point, the stop loss can be adjusted. However, I have no strong indication yet, okay? When would I get a better indication? So my interpretation is, looking at the micro count, this was an A wave down, B wave, and C wave. And if we break above the B wave high, that's a more or less reliable confirmation that price has bottomed. So I think this is the best we can get as early as possible, breaking above that B wave high at 265. And then it obviously needs to confirm it further by breaking above 277. Then we can really confirm a low has been made. Until then, this could extend further into a larger ABC structure, which is of course possible. Yeah, as long as it doesn't go below 221, we are still looking at higher in wave 5. Yeah, and that's just a quick update here about Tesla. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.